Hello, Warriors. Want to start it off with stock indexes. Last time I was with you was last Wednesday, and we had this pretty strong rally in the S&Ps. To me, it looks like a failing rally, and you could be short against the high that we had at 45.40, and looks like we're rolling over. If I'm correct about this being a failing rally, potential for 4,100 does exist. That would be 1.618 of this 270 handle decline. 270 handle decline. So we should start rolling over here this week. Part of it is what's been happening in yields, but you have to always look for some confirmation in the currency market to what's happening in equities. And here's a pretty good signal with a breakout happening in USDMX. So this is saying that, people that have been long MEX, because Mexican peso's been stronger, are coming out of this carry trade. And this chart definitely shows that there's potential for more risk off in USDMX. I want to get to the dollar now, which has really been relentless. When I left you last week, people know that I've been bullish a dollar from right down here. I was on Real Vision when I made that call, and then we had the false breakdown. There's only been a couple of dips to buy. This was one that we took advantage of if you're a follower of mine. And now if you look at what's happening, even in a big, say a telescope, we're piercing the 50-week moving average now. And again, 108, now we're, halfway there from where we were, about 6 weeks ago. I keep looking for reasons for some type of correction. We had one last week down to 103. So if you're looking for a reason that the dollar rally might be ending, that's your level. So I had a lot of things drawn at 280. At that time, I was looking for 250 to 2 to be a buyer, and instead we held right here at 103 before the recent rally up. We're getting confirmed highs. See, momentum is confirming highs, so we could get a pullback maybe to 104. I still remain bullish, firmly bullish on the dollar. Now we're getting a little bit of a pullback in US dollar yen, and the Bank of Japan, BOJ, is starting to make some noises about levels on the daily. We're diverging. I still think that there could be more left when you look at the weekly. I was talking about a 148 target. I haven't done anything on the short side yet, because I think that we could still challenge even 150, but there are some reasons to at least be cautious in the end. The 4-hour is not diverging either. So I remain bullish a dollar and not ready to step in front of the end short. Last week, I thought I missed it with my guard down on a partial week. And then on Friday, we had this huge day where yields jumped and the US dollar jumped. And unless you're thinking yields are going to come down, it may not be time yet to short the yen. Let's see what could happen a little further down the road. And, at times where I don't see any clear currency trades, like right now, I don't feel like I want to put new money in to new shorts and euro, even though it looks pretty negative from these levels. Last week, I was forced to cover when we closed back above this neckline in cable. I thought we were going to have more of a rally up towards 128, which just shows you how weak these currencies are. The rallies have been minute. We're not getting 50% retracements. We're not getting 61.8. We're getting maybe 38% retracements. Last week, I did say sell Aussie at the 65 to 5.5 level. We got up to 65.22. And it is my view that we're going to at least test 63, 62.5. So the commodity currencies are acting a little weaker than the dollar. Similar thing happening in Canada. And I don't think Canada's top, but it doesn't have the same momentum. As you could see, the RSI right here and right now is diverging compared to the dollar, right? Dollar RSI is diverging on the daily. It is diverging on the daily, but even on the intraday, when you look at this 4 hour, it is there too. But you know, I'd be more willing to buy a break than to declare Canada being a top and shorted. I'd buy pullbacks back towards 580 or so and be wrong under 490. Really need to get back under 135 to declare it's over. You know, we were talking about getting long Canada down here at 31.5. Still think we have 138 in it. That's up here. And potentially before it's over, challenge the highs of the move up here at 140. So King dollar is still the king. One thing I got real right, which, you know, currencies were choppy. But if you recall last week on Tuesday and Wednesday into the super moon, I said sell silver. Okay, those levels are pretty far away now. The first sell was at 24.68 and then at 24.83. Look at where we're at now. So maintain my bearish stance in silver and gold. Silver getting closer and closer to my target for it is down here around 2040. We'll be threatening a trend line at 22. But then again, still looks weak. If you took some action on what I was talking about for short silver, you should be taking partial profits and now have a, you know, more than a break-even stop. I don't think you want to stay short if we start getting back above the 2350 level, which is what it cracked yesterday. Held the 2350 level for a little while. So on our way to targets. Gold's been holding up much better, but still looks negative to me. So talked about this eventually getting down towards the 1800 level. It looks like it has a lot further to fall. So then silver, well, they both look bad, but silver looks worse as expressed in the gold-silver ratio. This support level held, and I think we're going to challenge these levels and trade maybe back to 87. Who knows if silver really, gold doesn't go to 1800, then, you know, maybe you're going to be looking at even more up towards this 95 level, which was halfway back. But the trend right now is the opposite of what it was the week before, where silver was leading to the upside. And I shorted the leader last week, working out pretty well. I also did take some shorts in regional banks. The regional banks, I think, still have important problems. If you recall, the rally I showed in S&Ps was, you know, 61.8, 78.6. Look how weak this rally was. My long-term targets in the regional banks are all the way down here. That would be the COVID lows down under 24 before it's open, before it's over. Amazon looks like a failing rally to me. Here's your weekly. You know, and I pointed out compared to Microsoft and Apple, which made new all-time highs, all we've had is a retrace in Amazon. So that's threatening. You could even say that we're going to have some type of head and shoulders formation. Maybe the neckline's going to be here at 26. So 17 from there will give you 110, 108. This is a target I have for Amazon. Apple's recovery has been very strong, much further than I thought it would go. Giving it up now, this too could be a failing rally. So I'm in the risk off camp. That's a time not to be looking to fade the dollar. Dollar will get some safe haven flows. I think that in the next month or so, we're going to have real nice entries on the long side of gold and silver, but we have to let this dollar rally play out. And I've been talking about levels at 108. I've been talking about levels for long-term buys in the euro. I have all these fibs up here for you. We ran by it when the market, before the dollar turned. So let me just put up some of the targets that we have in euro for the downside, which I believe is going to be near the 61.8 level, which is 101.80 right here, right around the 102 level. It's 61.8 in cable. Pretty far down there too. Here's your 61.8 at 114.22. So this is far from over this dollar rally, which means that, you know, this correction in S&P's of 4,100, maybe it turns out to be something even deeper. The one thing that I was wrong about, I don't walk on water, was crude. You know, I thought I had the top here in crude a week ago, but price is king. It is not about my opinions, but it was this rally this decline we had. I said 76 had to hold. It held above it, and now we've had some type of breakout here. People are talking $95 for this rally in crude to 100. Let's see if there's anything else I really want to cover here. So, and you saved a lot of money staying out of the long side of gold shares. Here's Newmont trying to hold here, but looks pretty ugly. Maybe we get a hold here in for a bounce, but on the GDX, my targets are still all the way down here at 78.624. So if you just subtract 27 from 30, under 27, you get a 24 level, and that's a big triangle. See that? And it's going to come close to testing the triangle down here, and that's when I'm going to be interested in the miners. So I have David Hunter with us tomorrow, Dave H. Contrarian. It'll be at 10 a.m. Eastern time. Mike's going to be up in about a little less than 90 minutes. Good hunting. Hope I saved you some pain from, you know, looking for the silver squeeze to happen now. I still think there'll be one, and that this might be the last trip down, and maybe the last time I talk about the short side of metals for quite some time. Remember, don't just count your pips, count your blessings, and I'll see you in the room.